1 year ago, I bought my very first rental property. I'm going to share my experience with you so you can decide if you want to purchase a rental property yourself. So this is the property I purchased last year. So as you can see on Redfin, I purchased the house for $172,000 on March 31st, and that was last year in 2021. And if you look above that, it says that the Redfin estimate is actually $196,000. But the cool thing is though, I found another listing that actually just went under contract, meaning it's about to be sold, and this house is going for $210,000, and it's right down the street from my rental property. So if you do the math, $210,000 minus $172,000, that gives me with a profit of $38,000. So I bought the property, I rented it out, and now it's worth about $38,000 more than when I purchased it. So if I wanted to sell the house today, I could take that $38,000 and put it in my pocket as profit. But I'm not going to do that because my tenant is paying my mortgage, and on top of the mortgage, I'm actually making about $500 in profit, and that $500 every single month is going right into my pocket. So my tenant is actually a Section 8 tenant, and that means the government is subsidizing her housing. So the government is paying me for her to live in my house. And this is cool because if my tenant can't actually pay me the rent, the government actually guarantees every single month that I'm getting that rent. So there's very, very low risk on my part. So as you can see on Redfin, my monthly payment, and that's for principal, interest, property taxes, homeowners insurance, my monthly payment is $725 per month. Now my tenant pays me $1,600 per month, and I actually pay a property manager 8%, and that's roughly about $100 per month for her to actually pick up the phone and take those phone calls for my tenant. So if the toilet breaks or, you know, something happens in the kitchen, water leaks, whatever, my property manager is going to pick up that phone and she's going to handle that issue. And this gives me peace of mind because I'm not waking up at 2 a.m. to answer a phone call to go and fix a problem that my tenant's having. So it's basically that cliche of mailbox money. I'm just collecting a check every single month. And there have been some issues that have popped up over the past year. For example, there have been mice, and my property manager had to get a mice person out to go and fix the problem. And that cost me about $400 for them to go over, set traps, and basically kill all of the mice. Another problem that we were having is where the water hose actually hooks up to the house. That thing was leaking, and it was a big problem, and I didn't want, you know, the basement to flood or anything like that. So we had to send a plumber over to go and fix that issue, and that cost a total of $180. And there have been some other small issues that have popped up. So over the past year, my total expenses for fixing all of these problems came out to be $1,000. And as far as cash flow goes, I made about $500 per month with the money coming in from the rent. So that came out to be about $6,000 over the course of the whole year. So all in all, over the past year, I've made about $44,000 with this property, which blows my mind because I put about $50,000 down to actually purchase the property, and it's already returned me $44,000. So that's almost 100% return, which is unheard of, especially if you're investing in something like an index fund or in the stock market. You know, you're only going to get about 8 to 10, 12% maybe. So to get 100% return on my money is just insane to me. So at this point, I can do one of two things. I can either sell the property, take all of the profits plus the down payment, which would probably be around $80,000. I can either take that, go buy another property, or do whatever I want with it. But the downside to this is the profit, the $38,000, I would actually have to pay tax on that. So at the end of the day, I'm probably going to walk away with $25,000, maybe even a little less. Or the other thing I can do is I can actually cash out refinance. And basically what this is the bank will give me a brand new loan, and they're going to give me that loan, plus they're going to give me cash to put in my pocket, and that's also tax-free. Now, if I refinance, I am going to have to pay closing costs on top of that, and that's going to come out to a few $1,000s as well. But I do think that's a better option because I don't have to pay tax on that money that I pull out, and I get to keep the property and the cash flow from the rent that's coming in every month, versus selling the property, then I don't have any cash flow and I just have a bunch of cash, which I do have to pay tax on. If you want to know how I was able to come up with the down payment to purchase this property, go ahead and click on this video, and it's going to show you how I started an ATM machine business so that I could get cash to actually save up and then buy this rental property. This ATM machine business is my bread and butter, and I recommend you guys going and checking out that video. So that is all for this video, and I'll see you guys in the next one. Peace.